Hey, what's up guys, John here. Everything that you know about buying real estate, investing in real estate, selling real estate in America is about to change.
If inflation keeps coming down, mortgage rates will come down as well. But I'm not waiting.
The Biden administration is working on a $10,000 tax credit to first-time homebuyers.
I want to provide an annual tax credit that will give Americans $400 a month for the next 2 years to put toward their mortgages when they buy their first home.
A $10,000 tax credit to home sellers who are selling their first home.
Or trade up for a little more space.
It goes onwards of saying this is crazy, a $5,000 annual tax credit for the first 2 years, which will essentially reduce one's mortgage rate by 1.5 percentage points for that first 2-year period. So it's a teaser rate for 2 years. In addition, if you are a buyer and your parents do not own a home, you can get upwards of $25,000 in down payment assistance for first-generation home buyers whose families haven't benefited from generational wealth building associated with home ownership. This is the tip of the iceberg, because in addition to this, they are discussing building and preserving over 2 million new homes, and their plan to lower rents and essentially take over the entire rental market with a bunch of new changes coming for landlords and lending. I'm going to break this down for you and show you exactly what's going on. I personally believe this is going to be one of the greatest real estate rug pulls in American history, and we could see a boom coming for the housing market due to all of these really big changes on one side, and on another side, a big dynamite-like explosion for multifamily as this entire bubble starts to explode. I'm going to break it down for you. Please hit the like button, YouTube will share the content, educate more people about what's going on in the housing market. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have life payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So this is absolutely shocking. Biden calls $10,000 tax credit. It's everywhere. Everybody's talking about this. But here's what people aren't talking about. Biden will propose several new provisions designed to control cost for renters. Now, 70% of all multifamily is owned by mom and pop investors, individual investors. So they're working on a plan to control costs for renters, including targeting of corporate landlords and private equity firms, which have been accused of illegal information sharing, price fixing, and inflating rents, the White House said. The president will also reference the administration's war on junk fees, targeting those that withstand added cost in rental application process and throughout the duration of a lease under the guise of convenience fees. Now, look at these changes. It's shocking. So President Biden is also taking action to lower costs by promoting housing stability for renters. The White House called for the Renters Bill of Rights. Now, what this means, the Bill of Rights, is tenants essentially will have the right to organize. They can go on strike inside of a building. They'll have, free education, enforcement, enhancement of rights. They'll have tenant protection attorneys there to defend them. No cost to the tenant. So the landlord would have to take on cost, right, to defend their position. They have the right to eviction prevention, diversion, relief. It's a really big problem for a lot of landlords, And so it lays out key principles of a fair rental market and has already catalyzed new federal actions to make the principles a reality. Today, President Biden is announcing new steps to crack down on unfair practices that are driving up rental costs. Fighting rent gouging by corporate landlords, the Biden administration is taking action to combat egregious rent increases and other unfair practices that are driving up rents. Think about that. Who is to determine what is egregious, right? I would argue that the cost of food is egregious. I would argue that the cost of car insurance, home insurance, everything is egregious, right? But to say that rent is egregious when, property owners, unfortunately, they've probably been hit in most markets with massive insurance premiums last several years, property tax bills last several years that they weren't expecting. A lot of people are pushing these costs onto tenants. And so in an environment where they're going to be going after egregious rent increases, what that really means is landlords could be in a lot of trouble. Corporate landlords and private equity firms across the country have been accused of illegal information sharing, price fixing, and inflating rents as part of the strike force on unfair and illegal pricing announced by Biden on Tuesday, the president is calling on federal agencies to root and stop illegal corporate behavior that hikes prices on American families through anti-competitive, unfair, deceptive, and fraudulent business practices. In recent filings, the Department of Justice made clear its position that inflating rents caused by algorithmic use of sensitive, non-public pricing and supply information violate antitrust laws. So you look at what's happening. They're going after everything. They're going after the entire housing market. Now, some people might say, hey, look, this is a really, really good thing because it's going to bring down rents. But in reality, is this going to bring down rents, or is it going to push a lot of mom and pop investors out of business, and large corporations are going to see this as a big opportunity to buy? And if they pay all cash, they're going to have a lot more freedom and flexibility, because they have discussed going after egregious rent increases in the past, but only to people and individuals and landlords that had Fannie Mae and Freddie Mac mortgages, which consist of about 70% of all outstanding mortgages. So you start to look at what's happening here. This is a big, big takeover of the housing market. Commercial mortgage delinquency rates rise for the third month in a row. So you look at everything that's happening right now. For example, look at this situation that's unfolding in this is Freddie Mac. This is delinquency rates. These are delinquency rates for multifamily. And this is all starting in January of 2023 and then 2024. And you can just see the trend, right? This is a parabolic move. So you see what's happening in multifamily. You see what's happening with small regional banks. Nearly 50 banks have multifamily loan issues. White House, it's absolutely shocking, because as they go after these landlords, you think about this, as they go after their landlords and rents do not increase, but borrowing costs, insurance, and taxes do increase, the value of these buildings will continue to erode. If a majority of these assets are held by regional banks, what is this going to mean? Regional banks are going to be in very, very, very big trouble. So in the beginning, it may seem like, hey, this is a really, really good thing. We're going to be offering tax credits, and we're going to be offering all these incentives to first-time buyers and first-time home sellers. But the reality is that the entire housing market is being taken over. It's no longer a traditional sense of the word, traditional capitalism. This is, capitalism for the rich. This is what this is. This is not a gift for the first-time buyer, in my personal opinion. Now, when you look at what this would look like for a first-time buyer buying a $400,000 property, 6% down payment, $24,000 down, even with the teaser rate at, let's just say it's 1.5% off, so let's say it's a 5% rate, they'll save $500-600 a month for the first 2 years, which is a lot, no doubt about it. It is a lot. But let's not forget that people in America tend to overextend themselves. And so when they see this as, hey, this is where my rate is, I can afford $3,000 a month, this makes a lot of sense. And then they start to see some of the other changes. For example, property insurance. Property insurance national average was 23% last year, 23%. So you see property insurance going up, you see, look at State Farm, for example. State Farm they just reported a $14 billion loss. What do you think is going to be happening to property insurance the next couple of years? My bet is it's going to continue to rise. So you have a lot of people overextending themselves, buying these properties, and then they're going to say, hey, you know what, I can afford the payments now. And then as the next year, 2 years come in and property insurance goes through the roof in most markets, and with it, they start seeing, look at this, homeowner insurance could go all the way up, go up 55% due to severe weather. 2 private Florida insurance companies want to increase premiums 53%. You start looking at what's happening. It's absolutely crazy. And the same thing, property taxes are going through the roof. Michigan property tax bill will go up significantly in 2024 thanks to inflation. Start taking a closer look at your property tax because it's likely going up. Colorado property taxes going up 40%. You start Georgia, they're trying to pass laws to try to prevent further increases. It's just happening all over the country. So when you look at what's really going on, what you're going to start to see is a lot of multifamily landlords are going to be in a lot of trouble. A lot of regional banks are going to be in a lot of trouble. A lot of home sellers might see this as a great opportunity to sell their property to a home buyer that is not taking in all the real information. For example, you look at what's happening here. You have VA home loans. They are all VA home loans that are not being paid, that are delinquent. They are, now they're the foreclosures are being paused. You look at what's happening, the same thing, FHA. They're allowing, first-time buyers, a way in which they can reduce their payments 25% to kind of delay what's really happening inside of the housing market. I mean, all of these things are all working against traditional capitalism. All of these things. And so when you look at all of these gifts that have been, quote unquote, given to Americans, stimulus checks and, all of these EIDL loans, PP loans, what did that really do for the economy besides cause a massive, massive bubble and push, in my opinion, tens of millions or maybe hundreds of millions of people into a worse financial position? Imagine what this will do. Imagine what this will do. You have first-time buyers buying properties that maybe they can't really afford in this economy where everything is getting more expensive by what seems like the month. They're going to be buying these properties. You're going to have a complete takeover of the rental market where a lot of landlords are going to have a lot of uphill battles. I mean, you have all the regional banking issues. And then on top of that, you have, they say 9 million homes will come on the market in the next 10 years as baby boomers age. I would argue that number is going to be far greater. And the reason for that is people 55 and older own almost 60% of the U.S. housing market. So it is significant. It is significant. And if you look at how many of these people that are retiring have enough to make it 20 years, 30 years, 40 years on their Social Security, on their savings, it's not as many as people would like to believe. They own a large chunk of the housing market. There's over 100 plus million housing units in America. You look at this. Look at it. There's roughly 50, 60 million plus homes owned by people entering retirement age or are retiring or have retired. How are they going to be able to not sell? How are they going to be able to hold on? I would argue this number could be 2x, over the next 10 years. But I guess time will tell. Time will tell. I think we're walking into a massive artificial bubble in the housing market, in the U.S. economy. And I think that millions and millions of people will be either positively impacted. I think maybe you see a lot of house flippers getting into the market, buying properties and selling them to people like this. And then there's going to be a lot of people that are going to buy these properties, overextend themselves, and not be able to hold on. I mean, as all of this is happening, you have to realize that millions and millions of Americans are likely going to be losing their jobs as AI starts to really, really take hold. What do you think about this entire situation? Drop below. Let's have a conversation about this. If you'd like to fix your credit to position yourself for this massive, massive wealth transfer we're walking into, without doubt. I mean, this entire house of cards is going to be coming down. We'd love to help fix your credit. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, late payments, any issue at all in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. I'll catch you next video.